The US stock market is likely to cool down in the middle of the week after a two-day rally of risky assets. Today, investors alert to the OPEC summit, a slew of surveys by the ISM and the ADP employment report. Our analysts are ready to share their reviews and forecasts. As we expected, Tuesday was full of optimism on Wall Street, and the benchmark stock indexes closed with confident gains. The Dow Jones surged 825 points, or 2.8%. The Nasdaq skyrocketed 3.34% intraday, and the S&P500 rose 3.06% to close at 3,790 points. Today, the stock market is feeling only the pleasant aftertaste after the rapid rally. The major stock indexes traded lower in the New York pre-market. All three indexes retreated from the previous highs. The S&P is expected to trade in the intraday corridor between 3,680 and 3,820 points. Earlier in the week, the S&P regained roughly 5.7% for just 2 sessions. After massive selling and fears, investors seemed to have spotted light at the end of the tunnel. The benefactor of optimism was the Reserve Bank of Australia because it surprised markets with a moderate rate hike and a softened rhetoric. Traders found a faint hope that the US Fed might also soften its stance in the fourth quarter. Besides, the JOLTS report on job openings added to the overall optimism about earlier than expected termination of a monetary tightening. The number of vacancies in the US contracted by 1.1 million in August. It suggests less active hiring. The number of vacancies in the US declined to the lowest level since June 2021, from 11.2 million in July. The actual reading is below the consensus of 10.775 million. 4.2 million Americans left their jobs in August, roughly the same figure as in the previous months. Despite high demand for employees, the lower number of vacancies in the US means that the Fed's rate hikes are to blame for a slowdown in the economy. And Elon Musk came under the spotlight on Tuesday. Twitter stock jumped 22.2% after Bloomberg reported that Elon Musk would go ahead with his Twitter purchase deal at $54.20 per share. The deal is worth $44 billion. As a result, Twitter was the main driving force for the S&P. Today, futures on the benchmark indexes dropped in the pre-market. Yields of 10-year treasuries rose sharply, and thus bolstering sell-offs of equities. Today, the Reserve Bank of New Zealand announced another aggressive rate hike, which undermined hopes for a pause in the global cycle of monetary tightening. The stock market felt a kind of a hangover in the wake of a party. The key stock indexes went down. The same is true about stocks of companies with a mega capitalization such as Apple, Tesla, Microsoft, Amazon, and Meta. In contrast, shares of Chinese companies are gaining ground. Alibaba stock appreciated 4.5% in the pre-market. The ADP employment report dampened investors' optimism in the stock market. The ADP payroll processor reported that the US private sector created 208,000 jobs in September after 185,000 new jobs in August because schools reopened and pandemic fears riddled. The actual figure is about the consensus of 200,000 new jobs. Apparently, the report discouraged Wall Street investors who alert to a series of macroeconomic data such as the services PMI and the ISM non-manufacturing PMIs. Besides, Fed policymakers Raphael Bostic will speak tonight. The US dollar is attacking a breather following the steepest slump in 2 years. Its index has surpassed 111 points. The intraday corridor is in between 110.70 and 111.80. Remarks of some Fed's policymakers yesterday cast a shadow over the stock market and cemented the bullish outlook for the US dollar. Federal Reserve Bank of San Francisco President Mary Daly said that the central bank has to go ahead with more rate hikes. She also acknowledged that the regulator pays attention to the greenback's impact on the global economic growth. Indeed, a slowdown in the global economy might down to the domestic economy. For the time being, fresh data on the trade balance proves the resilience of the U.S. economy. The U.S. trade balance deficit dropped to $67.4 billion in August, the lowest score since May in a year ago, and a bit lower than the expected deficit of $67.5. The firm US dollar is holding the upper hand over its Canadian rival. The USD CAD pair is trading higher, having climbed 0.83%. The currency pair was trading at 1.3620. And the report on Canada's trade balance was rather tepid, which is also bearish for the loonie. Canada's trade balance deficit stood at 1.5 billion Canadian dollars in August, having contracted after 2.4 billion in July. The region is below the consensus of the deficit at 3.45 billion Canadian dollars. It's the smallest deficit since December 2021 because exports shrank 2.9% due to decline in energy commodities exports. Imports fell 1.7%. The oil-dependent loonies went down in the face of the OPEC summit. Oil prices traded quietly intraday ahead of the OPEC decisions. Brent crude futures grew 0.7% to trade at $92 a barrel, and WTI futures climbed 0.8% to trade at $87 a barrel. As for the digital assets, the crypto market is following the dynamics of the stock market. The risk of mood is raising all previous gains. Bitcoin has shed more than 2% and sank below $20,000. It has traded at about 19,840 at the time of recording this video. Altcoins are also printing losses amid the fundamentals. The intraday outlook for Bitcoin is gloomy. The token is likely to give up its efforts to overcome 20,200. It's sure to settle below this level, trading in the corridor between 80,800 and $20,100. To sum up, the pre-market suggests a pessimistic session ahead. Nevertheless, a series of macroeconomic data, which is due later today, will be convincing enough for investors to revise sentiment. We wish you profitable trades and good luck.